Hello, traders. It's 8:01 a.m. Chicago time on Monday, the 5th of February, 2018, 9:01 Eastern U.S. time. Thanks for joining me again. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Looking at the overall position of the market this morning, seeing a bit of a bid under the U.S. bonds, gold, 10 years, the U.S. dollar, the Eurobond, and the Japanese yen. Those are your staple safety allocation products. Seeing a large move down in a relatively large move down in Euro Stocks 50, representing the Eurozone. Down 1.14% or 40 points. RBOB and crude are both down about 0.8 to 0.9%. Crude is trading at 64.91, still on the March contract, down 54 cents. The DAX is down 0.7% or 90 points. And then we get the Dow, NASDAQ, S&P, and so on. The S&P is opening with a 12-point gap. And this is it looks like the continuation of the prior drop from Friday. Friday, of course, we saw some market action that we don't see often. We had a very lengthy profile. We had an unusually large value area for Friday. There was really no value on Friday since the market continued to seek down and not be able to find buyers into the closing at the low with the point of control at the low. So overall, I think we're embarking on a week that may see some pretty good action. As far as what's on the calendar, it is Monday for the week. I like to review which days are doing what for the week. Today we're looking for services U.S. services PMI for January at 9:45 Eastern, and ISM non-manufacturing for January at 10 o'clock. And then we have ECB's Draghi at 11 a.m. Today, 11 Eastern today. So those are the key numbers: 9:45 Eastern, 10 Eastern, and 11 Eastern. Looking down the line at the rest of the week, we have a few figures here and there from the Eurozone, nothing really major. We get trade balance at 8:30 tomorrow for the U.S. We get the JOLTS job openings at 10. And then we have multiple speakers tomorrow. ECB's Weideman at 4 a.m. Eastern. 8:50 a.m. we get Fed Speaker Bullard and ECB Speaker Costa at 1. So I'm not going to run through these one by one because everybody has access to economic calendars. Looks like Wednesday's a little bit heavier than the other days, but overall, I'm not seeing anything huge this week. We got behind. We got past the non-farm payrolls on Friday. Traditionally, we don't see a massive range day like we did on Friday. Traditionally, we finish Friday very, very quiet with a whimper, and then we come in on Monday and we just trade sideways and imbalance. That's not my expectation for today. Something has changed Friday that's causing sellers to be a little more motivated. Here's what we expected on Friday. Just a complete miss on the basis of what was expected for the session. Just again, could not possibly foresee that the OTF would be a seller on Friday. So this was irrelevant. We had 3 days of balance on Friday. We were opening in a gap. The expectation was we would push back in. And if we push back in, we're back to 28.27 as the key target above. Under normal circumstances, this is what we would expect to happen. The market to re-seek its balance and go back to the prices that are most accepted. That did not happen. Why is this not changing? Come on. White. Yes. Okay. Barring that, the other expectation, which is what I was trading off of, I was trading off of scenario number 2 on Friday. The second scenario is we attempt to pull back into this 3-day balance, and we fail, and we start to rotate down. Again, non-farm payrolls had been released that morning. The number was stronger. I believe it was, I don't recall, I think it was 200 versus 180 or something like that expected. And the market did not like the number at all, and it ended up dropping very quickly, and then recovering and trading through the SOC. 2806, I believe it was 2806.75 was the scene of the crime of that number. That was immediately closed, didn't even make it on my sheets. And then the market continued to pull back and drop down. And so overall, it clearly was weak early on, and it just could not find any footing. But of course, I didn't expect it to drop as much as it did. Now, there was a little bit of dissonance between what was happening in the ES versus the NASDAQ. NASDAQ relatively stronger. The ES has actually rotated quite a bit. Again, in our review segment, I want to take a quick look at the weekly profile. So, for the first time in a while, we actually broke the one-time framing. So one-time framing is higher lows, is defined as the market going in a singular direction. One-time framing up dictates that we get the market retests or gets close to the lows but is unable to succeed to break them, and then continues on the next week, hour, day, 30-minute bracket, whatever your time frame is, to put in a higher low, higher or equal low. So we've been one-time framing since the end of December, all the way through January. So we've had several weeks of one-time framing up, and then we broke that on Friday. We could not get back in, and we end up stretching the profile down. So the one-time framing up has ended on the weekly, on a weekly basis, definitely on a daily basis. And so now we're looking for what happens in a longer term at the end of this week. We're looking for what happens as it pushes up. Does it put in a lower low? And in the following week, does it continue to go lower, which is what's expected. Gappy week. Right, the market's a runner, so we had a gappy week. The market just is unable to sustain higher prices temporarily. We have a very strong balance here. Remember, we had these 3 days. So Monday we came in and did this. We gapped down pretty good. And then we had 3 days of balance. Remember, 28.27 being the key price in this area. And then we have another gap, which you'll see on your bookmap levels, S5 bookmap levels, or on your flex charts if you use IRT. And then the market ended up closing very strong to the downside. Okay, the close yesterday, the close last week is right at the low. So we didn't get an excess low. The market did not put in single prints and bounce back up to close higher. It closed right at the low. And so it's looking weak coming into the week. We are trading the week of the 8th of January. And we have a gap. We have a couple of gaps above us. This is the balance point here. 28.27 should remain on your radar, in my opinion. And so overall, I'm expecting it to continue to drift down. We are trading in here currently. Currently, we're in the 27.44 is the last print. We've been trading 27.47 for quite a while here, for the last hour and a half or so. That's right here. This is the balance. This is the most accepted price on the week of the 8th. This is our template week. This is the week we're looking at. So when you got to go back to your profiles from this week to see what anomalies and what important features exist in this area, to find areas of potential support, resistance, and so on. So that's the review portion. Let's look at what we're expecting here. Quick look at the overnight for some clues. Let's make this bigger. 67%. So the overnight, a very clear two-way auction. We immediately drop on the open. Let's switch back to white. We immediately drop on the open. So this is the opening bar right here. We opened right where we closed, no gap. Sellers step right in. Take it down. The chart range here from the top to the bottom is 30 points, right? It's set to instrument range for 30 points. We don't usually see it filling this much of the range, on the overnight. It's usually pretty lazy and quiet. But what we have here is a market that is very, very active in the overnight session. And hang on, let's minimize this a little bit. So what we have here is a market that's pretty active in the overnight session. 461,000 contracts. That is 4 times the volume. It's about 4 times of the expected volume on the overnight, with some fairly large swings. The range being 27.33 to 27.57. It's a pretty wide range for an overnight session. The expectation is we're likely to see a two-way battle coming into today's session. So we did test up, we tested down, and we tested down, then we tested up, and then we're pulling back down, and we're sticking to the middle. So you have participants that have tested the extremes of the range with a relatively balanced overnight session. The market's finding some consensus here above, on top of the MC point of control from that week, from the week I was just talking about, January 8th. That's what we want to keep referring back to on your charts, on your profile, to see what areas are important. Currently, I'm looking at 2750 as the primary resistance coming into the session. This will likely be the over/under line. If the market gets above 2750, I'm looking for it to battle this area before it starts to continue higher and regain some of the action from Friday. We do look like we're gapping up. 2750 actually was just tested 15 minutes ago. So this area here, if you look at the price structure, very clear battle zone. Of course, it's a somewhat of a major strike price, and we are just fighting it all out. We're in the mid of this rotation here. The mid is outlined by these dashed lines here. That's the 50% of this rotation that we're seeing here, and it's battling it out. But what we get from the overnight session are the metrics that we get out of it are: the range is wide, it is not directional, right? So it dropped and it became responsive, and it took out the drop, took back the drop all the way back to the open. That's very important to note. Volume is high. It's at 465 now, which is a little over 4 times what we expect coming into the ES. Okay, so we have interest from both sides. We have high activity. So that's likely to carry into the session. The positioning is already taking place, the positioning. And so we're looking for a fairly active session. We're opening against we're opening in a gap zone. We're gapping through an old gap from the 11th of January. And so what we're looking for is, how does the market respond as we come in? And we can see that. We can see that right here on the book map screen. right near those, right near the consolidation, the consolidation that's underneath us, this area right here. See this area here? If I brought this down to my trigger time frame or periodicity, four-tick Renko or something, we would see a big zigzag zone, and this is what it looks like on Bookmap as the bids are getting stacked in that same area. So if I had a reason to trigger, I would be monitoring how do these bids right here act as the price is coming down. Are they going lighter, white, and then becoming kind of like this, becoming white, yellow, white, and then they become light blue, and then they become dark blue, which means they're going away? Or do they stay solid, and we have collisions? We start to collide into them, kind of like we saw right here, and the market is absorbing those prices. If it is, and it starts to rotate up, I'm looking to get long, for the and to shoot for the gap zone, gap close at 27.57 even from 27.40.39 areas. That's about 10 points, with a risk down below 27.35 or so. Once it clears 27.35, we're likely to see the overnight low rather than the overnight high. So that's just an example of a scenario that's setting up. So what do we have for today's plan? A lot of anomalies here in this profile. You can see that a lot of low volume nodes. The market just could not find proper two-way action on Friday. We are actually down here, so I need to slide this down. Okay, we're trading in this pretty busy area. You can see these levels here. Pretty busy area. This is the MC point of control being carried over from that January 8th week. We have a naked point of control at 44.75. We have the overnight point of control at 27.47. On top of the MC point of control, we have 27.50, which is a price action based resistance level, and we are down here at 27.41 with 27.34 beneath us and 27.34 the naked point of control beneath us, and at 27.33 the overnight low. And so what I'm looking for this morning is for the market to open up. I expect a wide opening swing. I expect action on both sides. I expect positioning to take place on the higher time frame, so market on open orders. And then I'm looking for it to fail to push lower. I'm looking for an impulse higher into this 27.50. I'm looking for it to battle here at the 27.50, and then it's a moment of truth. Does it push through? If it pushes through, then your targets are going to be the prior week close at 27.57.50, and then the key target will be 27.60. So that's what I'm looking for on the primary plan. So I'm looking for it to finish somewhere in this point of control to regain some of this area down here. But the profile from Friday is a trend day profile. The market could not find the opposing force, could not find balance to properly price this product, and I expect that we are likely to explore a fair amount today. So that's the primary trade plan, is responsive buying. So anybody that's been sitting on the sidelines, anybody, the bigger participants with cash that they still need to allocate into the market, these are the areas they're going to be looking for. This is the kind of move down that they're going to be looking for in order to buy. We're pushing up against a 61.8% pullback in the S&P. We're between 50 and 61.8% on the last swing. So this is a pretty good area, kind of a golden rule area to start to accumulate at least. So I'm looking for responsive action coming into today, and then the overnight confirms for us that is confirming for us that that there is participation on both sides. Okay, prices have moved low enough at this point. I don't see any disaster earnings. I don't see any big changes macroeconomically or fundamentally that would cause us to believe that these prices are sustainable down here. Maybe that'll come out. But for now, we expect it to be responsive back up. Now, if we don't become responsive back up, when we open, swing up, and are just not able to get into that 50 and start to dilly-dally and then roll over back into the opening swing, then I'm looking for the overnight low as the first target from the 2750 area. That's 17 points of range. And then I'm looking for it to start exploring the thicker areas below. So that would be the second scenario. Let me redraw that with the scale properly moved up. So here we go. Looking for it to open, attempt higher, push into 2750, the 50 to 2750 area, fail over, and then get back through the opening swing. And then I expect the continuation of the selling, the weaker hands selling, or the late participants selling into it. And I'm looking for 2550 as the key area to test below. That's the secondary hypothesis. That would give us about 25 points of range, 25, 26 points of range. Again, we're opening in a gap, so a lot can happen here. The third scenario is an open and run. So this would be an open test drive. If we open test drive, and I'm looking for the mid of the gap below, 2716 as the third plan here. The fourth plan is an open test drive the opposite way, where I'm looking for the market just having a hard time staying down, and then you get a drive. In other words, we have good, strong buying, lifting on the offer, and then that would result in a trend up day and a quick push into 2760 quarter and beyond. So in that scenario, we can end up all the way back up to right here, this low volume node right here, 2780. Big range. 2780 is a little extended, but that's where we're looking. Well, that's what we would be looking for over the next few days. So big move up, and then the market likely to get tangled in this area here for about 25 points of range as well. Okay, that's scenario 4. All right. Anyway, it's a lot to cover. I understand. Just remember, don't let your emotions get the best of you. Your job is not here to get involved like it's the Super Bowl. Great game yesterday, by the way. You're not getting involved like it's a Super Bowl. You shouldn't be emotionally invested in your trades. You're simply here as a scientist looking for what the market is trying to do, how well it's doing, which side is winning, and for you to surf with the side that's got the nicer waves. Your job is to identify the waves as they come as far away as possible, so that you can prepare to paddle, get on your surfboard, and ride them back into shore. That's our job. Our job is not to create the waves. Our job is not to fight the waves or create conspiracy theories about the waves. Our job is to take something that occurs naturally in the market, to identify it as early as possible, and then to ride it. That's what we do. We don't create it. We just ride it. We don't add to it. We don't take away from it. We just surf it. That's it. That's your job. So if you find yourself getting emotional, you're fighting a losing battle, it's best to take a break. Good luck today.